those are the Union Bank top management getting ready to speak to the press. Remember that the stock has, or the company or the bank has come out with a very poor set of numbers, where the net profit is down 27% on a Y-on-Y basis to 579 crores, and that too it's supported by a tax write-back of 180 crores this quarter. And if you're adjusted for the tax write-back, then the profit would have fallen even further by 49% on a year-on-year basis to 339 crores. Now, the provisions have spiked up considerably. I think we can cut to the management.
Union Bank of India for the year ending March 31st, 2014. Instead of looking at YOY, because the way dynamics are changing in the economy and banking, I feel it would be more proper to put it in the right perspective if we talk Q on Q, that is December 13 over March 14. If we look at the net profit, that is the much talked about number, which stood at 579 crores for the Q4 2014, which shows QOQ growth of 66%. Similarly, growth in fee income is up by 32%. Then CASA ratio has improved by 1 percentage point over December quarter, that is to 30% from 29%. The capital position has strengthened to 10.80% as of March 2014 in comparison to 10.12% as of December 13. CET1 now stands at 7.18%, that is up by 218 basis points, higher than the regulatory minimum requirement. Some of the measures which we took during the quarter, which has resulted that our cost on deposit has gone down by 11 basis points from 7.40 to 7.29%. Yield on investment has gone up by 8 basis points, that is from 7.61% to 7.69%, and NIM has improved by 5 basis points, that is from 2.5% to 2.55%. Our total business has been 5.32 trillion rupees. The ROA which we talk about, which we expect in times to come should hover around 1%, which is half of that as of now. Overall, what we have taken on the macro level, various steps which have shown some results in last quarter of the last financial year, and going forward, looking very discreetly at our numbers, we are sure the results would be better in the next quarter. First thing what we did was we have rebalanced our assets. Many of you would say that because of our capital constraint, our loan book is not increasing. No, the real answer is we have contained that growth rate. Rebalancing, when we say, if you look at our retail and agri and MSME growth, in the last quarter it has gone up from 37% in the previous year to 44% this year, and we expect to increase the share of this portfolio, that is the retail, agri and MSME, by 5 percentage points every year. The CASA ratio, which stands at close to 30%, increased by 1 percentage point, and we are sure the steps which we have taken, twofolds. One, if you look at our average numbers, whether you look at the deposits or advances, our average numbers are much more better in absolute terms, and so also YOY of the average numbers. Fee-based income, we have created a unified marketing setup across the bank, and I'm sure in the times to come, the fee-based income, the time horizon what we look at Union Bank would be somewhere around 18 months. The fee-based income would give us a boost of minimum 15 to 20 basis points. Talking about the capital part of it, we have about 4,000 crore of headroom in additional tier 1 capital, and about 1,400 crores for raising from the market in tier 81. Bank will also contain growth of risk-weighted assets. If you look at our last quarter numbers, our growth in asset has been higher, whereas our risk-weight assets growth has been much lower. So that is how we are trying to look at our quality of the numbers on the asset side. Having said so, if we look at the NPA numbers, some of you may be thinking the original guidance which we gave last year in the beginning of the financial year of our asset portfolio to grow was about 16%. We had contained that growth at about 10%. If we had grown at the same rate, our gross NPA number would have been within the guidance of 3.88%. Now, our guidance for the bank for the year 14-15, we intend to grow credit at 10 to 12%. Deposit 9 to 10%, CASA share would be up to 31%, NIM at 2.9%, and gross NPA at 3.75%. Thank you.
So as far as the provisions are concerned, they've more than doubled this quarter. It's nearly 50% up. If you could give a breakup on your provisions, how much on bad loans, how much on wage revisions?
Okay. Two predominantly factors. One is NPAs. This year NPA number increased by about 5,600 crore. So if we look at the provisions, there are the two numbers which are provision for NPA. It has gone up from 1,555 crores to 2,100 crores, and for staff it is, we have provided a 5%.
So how much of the NPA provisions are NPA?
2,106 for the current financial year.
The gross NPA figure of 3.27%. What is the target that you had mentioned? By when do you want to achieve it?
3.75%. Next financial year. Gross number 3.75%.
So what is the fresh slippage in this quarter, and what
it's about 12, to be precise, 1,199 crores. Of that, about 1,000 crores is contained in 8 accounts.
And these are from various sectors, or?
They are from various sectors across. Nothing lumpy. Only, and one big account of about 300 odd crores.
So
how much restructuring?
Total portfolio is about 15,000 crores as of now of restructured portfolio. Of that, 62% is just two factors. One is discounts and stall projects. Total for the year, I'm saying 15. Q4
1,435.
1,435 was the restructured portfolio.
And the pipeline for the next quarter?
Full year I have got
1,740.
1,700 crores.
And going forward, what's the restructuring pipeline looking like for you?
That is what I said, 1,700.
1,700.
Till when do you think this consolidation will continue? When do you see growth picking up? What kind of factors are you looking for growth to pick up?
Look.
All right, so that's of course the management of Union Bank. Poor set of numbers. Asset quality has worsened considerably. The GNPA worsening to 2.9% in the fourth quarter, and the stock of course reacting. Sharp cuts post the numbers, but